How to do crypto arbitrage, a low-risk investment strategy for profiting from market inefficiencies. Now, lately, I've been getting a lot of questions on how crypto arbitrage works, so I figured I'd make a video to explain it. If you have the same question, then this video is for you. In today's video, I'll show you what arbitrage is and both the advantages and disadvantages of creating an arbitrage strategy. Now remember that this content is for educational purposes only, not financial advice, but as always, if you're here, you're interested, so let's get into it. So what is arbitrage? Arbitrage is when you buy and then immediately sell an asset in different markets to take advantage of the difference in price. You can do this with stocks, bonds, currencies, commodities, and other financial instruments too. Let's start with an example. If the price of Bitcoin is $30,000 on exchange A and $30,050 on exchange B, an arbitrager could buy Bitcoin on the first exchange and sell it on the second exchange, making a profit of $50. In crypto, you would do this on exchanges, not with brokers. The reason for this is because the transactions on brokers' accounts typically take longer than they do on exchanges. Now, arbitrage is a fast game, so you need to take advantage of the tools that take the least amount of time for you to use them. Here's another example for you. Let's say that the price of a stock is $100 on the New York Stock Exchange and $102 on the London Stock Exchange. An arbitrager could buy the stock on the New York Stock Exchange and then immediately sell it on the London Stock Exchange, making a profit of $2 per share. So let's answer the question, how does arbitrage work? Arbitragers, which are just people who are buying and selling or trading an asset, exploit market inefficiencies by buying an asset in the market where it's undervalued and then selling it in the market where it's overvalued. Arbitragers are able to make profits because they're able to identify and exploit market inefficiencies. When there's a price difference between two markets, it means that one market is mispricing the asset. Arbitragers buy the asset in the low-priced or mispriced market and then sell it in the high-priced or correctly priced market, making a profit in the process. This process drives the price of the asset closer together until arbitrage opportunity is eliminated. Now, if you're new to my channel, then you might not understand that I like to cover the advantages and disadvantages of the things that we go over in the video. So let's cover the disadvantages of arbitrage. There are a few. So this is a low-risk investment strategy, not a no-risk investment strategy. The cryptocurrency market is volatile, which means that prices can fluctuate rapidly. This can make it difficult to find and exploit arbitrage opportunities. The arbitrager may not be able to make a profit after taking into account trading costs that they may incur. Speaking of fees, there are trading and exchange fees. There are fees associated with trading cryptocurrencies, which can eat into your profits or even cause there to be no profit or even a deficit in profits altogether. Next, arbitrage requires quick action. If there is a sudden change in market conditions, the arbitrage opportunity may disappear before the arbitrager can actually act. So for example, the price of a cryptocurrency that you're trading could change before you complete your trade. This can erase the opportunity for a profit altogether. Next, let's talk about the liquidity of the cryptocurrency market. The liquidity of the crypto market refers to the ease with which you can buy and sell cryptocurrencies. A liquid market is one where you can easily enter and exit trades without incurring significant slippage, but that's not always the case. Number 5 is the regulatory environment for cryptocurrency. It's constantly evolving, so this can make it difficult to stay compliant with the latest regulations. Next, arbitrage opportunities can be difficult to find. Arbitragers must be quick to act, and they must be able to manage their risk efficiently and effectively, because arbitrage opportunities can also be quickly exploited by other investors. Now, I do have some tools listed for you later in the video that will help you find arbitrage opportunities. Now, this isn't an all-inclusive list of disadvantages, but this is the last one that I'm going to list in this video, and it's platform or exchange bottlenecks. Individual platforms and exchanges may have delays and errors. For example, a deposit can be stuck and require manual approval, causing you to miss out on your trade window. Account lockouts and bans can be catastrophic for you as well, causing you to lose all of your deposited assets in the process. Now let's cover the advantages of arbitrage. So the first advantage is that this is a low-risk investment strategy. Arbitrage is low risk because it's based on the idea that market prices will eventually converge. If the price difference between two markets is too large, arbitragers will buy up the asset in the mispriced market, driving up the price. This will eventually close the price gap and eliminate the arbitrage opportunity. Next, arbitrage can be profitable. If an arbitrager has the necessary tools, financial resources available, and know-how to spot these inconsistencies in the market, they can make a pretty penny. Number 3, arbitrage is a legal investment strategy. Arbitrage is often used by hedge funds and other institutional investors to make profits. So you can too. Why not? Arbitrage enables users to make low-risk passive income. There are different tools available that can automate an arbitrage strategy for the user, but more on this later in the video. Next, there are 4 different types of crypto arbitrage that I want to cover for you. Listen, you got options. So first, let's talk about spatial arbitrage. This is the most common type of crypto arbitrage. It involves buying and selling the same crypto on different exchanges at the same time. This strategy is effective because it takes advantage of the fact that cryptocurrency prices can vary from exchange to exchange. Next, let's look at triangular arbitrage. This strategy involves buying and selling 3 different cryptocurrencies in a specific order to profit from price differences between the 3 assets. So for example, you could buy Bitcoin on one exchange, sell it for ETH on another exchange, and then sell the ETH for Bitcoin on the 3rd exchange. And that's where your profit would come in. If the price of the 3 cryptocurrencies are misaligned, you could make a profit by completing this triangular arbitrage trade. The 3rd type of arbitrage is statistical arbitrage. This strategy uses statistical models to identify price discrepancies between different cryptocurrency markets. This strategy is more complex than spatial arbitrage or triangular arbitrage, but it can be more profitable. For this one, you just need to have a really good grasp on market analysis and how to calculate probabilities and statistics using the market analysis data that you have. The last type of arbitrage I'm going to cover for you is latency arbitrage. This strategy exploits the time it takes for transactions to be processed on different cryptocurrency exchanges. So for example, you could buy Bitcoin on an exchange with low latency and then sell it on an exchange with high latency. If the price of Bitcoin changes during the time it takes for the transaction to be processed, you could make a profit. Now that you know what it is, what it does, the advantages and disadvantages, as well as the different types, let's cover how you do it. Now, there are only really 2 things you need to do. And the first is identify arbitrage opportunities. Now, to do this, you could do something like use a cryptocurrency arbitrage calculator. There are many cryptocurrency arbitrage calculators available, and the best one for you is going to depend on your specific needs and preferences. Some popular options are Blackbird, CryptoTriangular, and HaasBot. Just to name a few, I'll drop those in the description box for this video. Now, outside of using a calculator, you're going to want to monitor multiple exchanges. You can manually monitor the prices of different cryptocurrencies across multiple exchanges. It's important to act quickly though, as these opportunities can disappear quickly. The 3rd thing that you can do is use arbitrage bots. There are a bunch of different cryptocurrency arbitrage bots available, and the best one for you is going to depend on your specific needs and preferences. Some popular options include Pionex, Bitsgap, multitrader.io, and Cryptohopper, to name a few, but these will also be in the description of this video for you. Now, the last thing to identify is just remember to always do your own research. Okay, if you're going to be using tools like the calculators or the bots, do your research. Make sure that they're reputable. Make sure that they have good customer service. Make sure that they actually have a community of people who are using them before you start putting your money on these platforms and using these tools. Now, the second thing that you need to do is execute the arbitrage trade. There are just 3 tips for execution. You need to be quick, consider the fees, and manage your risk properly. Sounds easy enough, right? But a lot of people miss that last one, that manage the risk. Yeah, a lot of people skip that. So don't be like a lot of people. Now, if you're considering using crypto arbitrage as a strategy, do your research and carefully consider your risk tolerance as well as the advantages and disadvantages of the type of investment strategy. Now, at the end of the day, arbitrage can be a profitable investment strategy, but it's important to understand the risks involved. If you're considering using crypto arbitrage as your strategy of choice, do your research to find tools that are going to work for you and work with you so that you can achieve your financial goals, and consider your risk tolerance as well as the advantages and disadvantages of this type of investment strategy. Now, I personally don't use arbitrage as one of my investment strategies that I prefer, but there are so many variables that are out of my control, and that's just not to my liking as an investor and trader. What I do instead is open up a chart, go down to a 1-minute time frame, and just ride the waves. This works better for me. Let me know in the comments below if you think one of the 4 types of arbitrage strategies that I covered in this video is going to work for you. Now, as always, I hope you guys enjoyed the video. If you have any questions, drop those in the comments. I hope you guys are having an absolutely amazing morning, afternoon, or evening, wherever you are in the world, and I'll see you in the next video.